Uh, Today we'll be finishing the accounting cycle, and next week we'll be moving into banking procedures and cash control. Does anybody have any questions? Does anybody have any questions? Homework doing? You're doing all right in the homework? Okay, good. All right. So today our learning objectives are, we're going to be journalizing and posting adjusting entries. This is not new. We talked about it last week, and we'll be continuing this week, doing some additional examples. We're going to learn about temporary accounts. What are they? Why are they closed at the end of the period? Because they are closed. Journalize and post adjusting entries and closing entries as well. Prepare a post-closing trial balance. Post-closing trial balance. Okay, before we start, let's review a little bit about the accounting cycle. Okay, first off, can somebody tell me what is the start of the accounting cycle?
The beginning of the period.
Okay, the accounting cycle, what does it begin with? It is at the beginning of the period, that's correct. What do we need at the beginning of the period? We need a lot of these to run our business. What do they call?
Transaction.
Yeah, business transactions. So we have business transactions continually throughout the period. What are we looking for in our business transactions?
One debit, one credit.
There's one debit, one credit, correct. So what's that telling you? One and one, that's two. How many accounts are affected in a business transaction? Two or more. At least one debit and at least one credit. What comes with the business transaction that proves that that business transaction actually existed? What would the IRS come looking for?
It's the source documents.
Source documents, right? Receipts, purchase orders, sales invoices, all those documents that indicate that there's been business transaction occurring throughout the period, right? Okay, so we've got a business transaction, we've got the source document that goes along with the business transaction. We've got two or more accounts, one debit, one credit. Then what? What do we do?
Do book of personal entry.
Yes, we start recording, right? By, what do we call that? We
journal.
Journalize. Good, we journalize. And then what do?
We post into the ledger.
We post it to the ledger. We post it to the ledger. Now, we journalize and we post all these business transactions throughout the period. At the end of the period, we want to form the three financial statements. What are the three financial statements?
The income statement.
Income statement. Statement of owner's equity. Balance sheet. Very good. So what do we do? How do we get those three statements? How do we derive them? What do we need to do at the end of the period in order to form the financial statements? What is the first step?
Trial balance.
Yes, it's the trial balance is an interim document we use. Can somebody tell me something about the trial balance? How do you format it? And number two, what must happen in the trial balance? And where do we get the numbers for the trial balance? Where do we get the numbers for the trial balance? We look at the general ledger. We take all the balances from the general ledger. Okay, and we move the accounts and the balances, right? Obviously, accounts and balances go together. And we move them onto a trial balance. Is there any set way we do that?
Chart of accounts.
Yes. Right. We put them in order of the chart of accounts. Can you tell me what is the order of the chart of accounts?
The assets.
Liabilities.
Owner's equity.
Owner's equity.
The revenue and expense.
Revenues and Expenses. What's the most important thing that must happen with the trial balance?
It must match
What must match?
The totals.
The totals of
The debits and the credits.
the debits and credits must match. Great. So we complete the trial balance. The debits and credits do match. Okay, we don't have to go back and search to see if there was an error. Because if they didn't match, we have to go back and see where we made a mistake. So what do we do next? After we form the trial balance. But before I mention, can we use a worksheet?
You can, but you don't.
Is it good? It's optional. The worksheet's optional. Why do we use the worksheet? To help us, yes, to correct any errors along the way, to make sure that we are in line. Okay, so we've got the trial balance, also called the unadjusted trial balance. What's the next step? If we take a look and think about the adjustments, what kind of adjustments we make? We make adjustments on items like prepaids and accruals. Very good, prepaids and accruals. All right, after we make our adjustments, right, we're going to journalize, post our adjustments into, right, the general ledger. And then on the worksheet, what is our next step? What are the next columns?
The adjusted trial balance?
Yes, we're going to form the adjusted trial balance. Very good. The adjusted trial balance. And again, what must happen?
They must balance from the credit and the debit.
Total debits must equal total credits. Also within the adjusting entry columns, we're using the worksheet. The total debits must equal the total credits in the adjustment column. Then what happens? Then what do we do after we form the adjusted trial balance?
We can start building the statements.
Statement of what comes first?
Income statement.
Good. What comes second? Financial statements. And the third is the balance sheet. Excellent job. Okay, so tonight, what we're going to learn, we've got all the way up to that point. All right, tonight we're going to finalize the accounting cycle. By number one, right, we have closing entries. Closing entries. We're going to learn about the closing entries. We're going to close temporary accounts. Right, we're going to close revenues. We're going to close expenses. We're going to close income summary. We're going to close withdrawal. We're going to close them out. What does that mean? We're going to zero them out. We're going to bring those balances to zero in the ledger. And then we're going to open up an account temporarily called the income summary. Right? All the revenues and expenses will be closed out or zeroed out into the income summary. Okay? And then from the income summary, we're going to transfer the balance of the income summary to the capital account. To the capital account. What do you think the last item, I did mention it, where we're going to close. What's the last item we're going to have to do? What's the last journal entry we're going to have to make? What's the last item or account that's going to be closed?
equity, right?
If we think about the statement of owner's equity, right, we have beginning capital, we add net income, subtract net loss. If we have any additional investments for the period, we're going to add those also. Then what do? We subtract withdrawal, right? And we end up with what?
Total equity.
The ending capital account. Very good. We end up with the ending capital account. Excellent. Okay, but the point of it is withdrawals is closed out into owner's equity. It's a temporary account. Withdrawals is a temporary account. We begin withdrawals, right, as a business owner needs cash throughout a period, right, and then we're going to close it out at the end of the period. Okay? Now, here's the question. We closed revenue, expenses, right, withdrawals, income summary. We're going to talk about income summary today. what do you think is going to be left open from period to period? Company has a cash account. Do you think it's going to take their money out of the bank and say, I got to close my cash account now, it's the end of the period? No, that's going to be open. How about equipment? Are they going to sell their equipment? No, they're not going to sell their equipment. How about what they owe somebody? Can somebody tell me? Accounts payable. Are they going to close that out?
That'd be great.
No, or they're going to close out the receivable. So, in other words, what accounts, and you could give me categories, right, within a statement that would be left open from period to period.
Revenue.
You'll close out revenues. What accounts?
The withdrawal.
Withdrawal we close out at the end of the period. Assets. Everything, and you're right, everything affiliated with all the assets are going to be left open. Somebody else? Liabilities. You're right on track. Accounts payable included, notes payable, yeah. Salaries payable, wages. What else?
Expenses.
Expenses, we what? Revenues and expenses we close, withdrawals we close, income summary we close. We keep open assets, liabilities, and owner's equity. What's the main account owner's equity? The main account under owner's equity in the balance sheet?
Capital.
Capital, very good. You got it.